TJ the Wheel Deal coming at you live. It is Friday, March the 20th, 11:30 a.m. Central Time, Texas time. We're gonna get into it today, guys. I'm TJ the Wheel Deal. I sell puts, I sell calls for a living. Roll one makes dollars and cents. I've been known to buy the timely leap. It's kind of what I do. What's going on, Manish? We're gonna go through the program today. So the first thing is gonna be 1 minute with God. Then we're gonna do portfolio recaps across the board. We will feature the big portfolio at the end as well. And then I'm gonna do live Q&A along the way. And there's the link right there. If anybody wants to ask a question live, just hop on the link. We can do that. We're not gonna turn it into like a 30-minute segment or anything. But ask your question, minute, 2 minutes, and we can get that going as well. So it's something that I'm going to do whenever I go live on Fridays. And these are community lives. These are not just members only lives. So open anything, open all the criticisms, bring it to me. I know we're having a drawdown this year, so everybody's better than I am all of a sudden at trading options. But I'm just going to ask you a couple of things. Where's your 8-figure portfolio? Where are your results? Where have you been paying? Where have you been selling options transparently? So if you're going to come with a bunch of shit, you need to come with some results to back it up. If not, I'm the guy that's going to push back. I'm not your friendly YouTuber in that aspect because this is just my rule of life. If you don't have what I'm looking for in life, I don't really care what you have to say. That's just the way that I roll, man. Some people are like, oh, that's really arrogant. No. I'm always looking for people that are at the next level, and those are the people that I aspire to be. So I care what they have to say. So I'm very, very careful and very cautious as to the information that I let penetrate my soul, if you will. But anyway, let's get into it, man. What's going on, Badish? What is going on, Joe House? Joe How SP. How's that? Hopefully I didn't screw that up too bad. What's going on? Calais. You guys are killing me. Larmo, I could do that one. What's going on? Real Matt Money. You see, y'all need names like that. Easy shit for me to pronounce. This is stuff over here is tough for me, man. Madrage 88. I don't think I screwed that one up too bad. Nathan, what's going on, Nathan? Anyway, man, I hope you guys are doing well. I've only glanced at the portfolios a little bit, got on the vibrating plate, got in the sauna, took a shower, went live. So I don't really know what's what. I don't know how the market's doing. I don't know if it's just like super flat. I just turned on CNBC. Looks like Bitcoin's down 0.5%. Crude's up a little bit. I'm just trying to look at the Dow's down 0.5%. The S&P's down almost 1%. The Nasdaq's down over 1%. There's going to be a lot of. Are we cool? Of course. Why wouldn't I be cool with him? Super cool dude, man. He's actually. I have about 10,800 members or not members, subscribers. I'd say probably almost half of those came from Amit's channel because I'd go live on his channel with him. I don't know, been on his channel probably over 100 times, and I get a lot of subscribers from that. Cool dude. I mean, it's got the energy, man. He's built for this shit. He's got a lot of stamina. He's young, so this is his whole life right now. Is like zero balance. Doesn't care about that. He's just trying to, AK Media, right? I guess that's the name of his business. So he's trying to do that. I feel like he's going to be like a CNBC. Gets more views than CNBC. It's kind of crazy, man. I don't know how many subscribers he's at these days. Probably well over 100,000 on YouTube. I see a world where he'll be at 1 million. I see a world where Amit will be at 1 million subscribers, probably in the next 3 to 5 years would be my guess. Really depends on the bull market, right? Because YouTubers tend to do better whenever the market's pumping. The market doesn't pump. People don't want to watch that kind of shit. When the market's pumping, everybody wants a piece of it. It's kind of weird. Nobody wants stocks whenever they're at a discount. They want to pay nosebleed prices for these. Yeah, on Monday, he reached out to me. Amit reached out to me via text, and I'm going to be on his channel for for the market close. I think it's going to be like a 3:45 Central, give or take. It's a grinder, makes it easy to consume news while working. Yeah, it's entertaining. It's entertaining, and he's on top of it. I just don't know how he does it. Like I don't know how he does it to know so much about so many different subjects. Like I know how to sell puts and calls, collect premium, roll, and makes dollars and cents. I got my 6 to 8 positions max on a portfolio, and I hone in on that. I spend all my time on that, trying to figure out, okay, how can I make money? How can I make money? And amid trades, also, he knows how to sell options. He has his core positions. I assume Palantir is probably still the biggest one. I would think that Hood's right under there as well. Or I'm not really sure about Hood because I think he had sold in the money covered call, so I'm not sure if those got called away or not. So I don't know what the makeup is of the portfolio, but I don't know how you could do all the content and still be trading. That's why it's like tough for me. So I'm like, well, I'll just sell options live, and that's easy for me to kind of like do it. But anyway, yes, provided everything holds up on my end and his end from a schedule perspective, I should be on his channel next Friday or next Monday. I'm sorry. So tune in for that. Tune into that. Anyway, let's get into it, man. Let's get into it. 1 minute with God. So let me see if my glasses are even on. No, not yet. Let me wait for these guys to fire up. And then we'll do the 1 minute with God. Let me turn the page. So it's going to be on delegation. So let me just wait for these glasses to fire up so I can record it. I can post it on my X and go from there. There we go. We should be good. Battery at 85%. Let's do this thing. Let me get my hat a little higher so that the brim doesn't show up on the recording. All right, 1 minute with God, March the 20th, delegation. What is good about sharing responsibility? Moses was an enormously gifted leader who fell into the trap of believing he can do it all by himself. It is possible to be responsible. It is possible to be too responsible. When you stretch yourself too thin, you put yourself and others at risk. You can wear yourself out, make others wait, prevent those with gifts from having the opportunity to use them, and keep them from growing spiritually through serving others. In the process, God's people became dissatisfied and distracted, and God's work is delayed. Jethro's advice to Moses in the book of Exodus has been God's strategy from the beginning: delegation and discipleship. God's response: you're going to wear yourself out, and the people too. This job is too heavy a burden for you to handle all by yourself. Exodus 18:18. He called his 12 disciples together and sent them out 2 by 2. Mark 6 and 7. God's challenge: go and make disciples of all the nations, baptizing them in the name of the Father and the Son and the Holy Spirit. Teach these new disciples to obey all the commands I have given you. Matthews 28:19 and 20. Delegation is hard, man. It is very, very difficult for me specifically because I've owned a few businesses along the way, because you think you could do better. You think you could do it better than anyone else. And then you grow up with this mindset of you want the job done right, do it yourself and all that stuff. But my father-in-law is a master delegator. He knows that he's the best at, his personal injury practice, but he trusts other attorneys to run a part of the race as well. And his law firm just flourishes because he knows how to delegate responsibilities. He sees what people can and cannot handle, and he does that. And I aspire to be like that, because if I had to like hand the keys to the kingdom and be like, hey, I need you to sell options on all the accounts, I'd feel like I'd be micromanaging the crap out of someone and driving them crazy. I wouldn't give them time, I wouldn't give them a chance to shine and to show me how good they could be at it. Anyway, that's 1 minute with God, March the 20th. Peace out. So there's that. So let me get it downloaded over here on the app, and we will go from there. Driving trunks around. I got a little text message going. Okay, so let me find my Meta AI play here. So I made a post about Meta the other day. They're gonna shut they're gonna shut down the metaverse, and it costs them like 50 to 90 billion dollars. Is that like really true? Man, makes me feel better about our drawdown, I'll tell you that. Anyway, before we get into it, the first thing I want to do is I want to share with you guys what triple witching is, because today is triple witching, and it is going to create a lot of volatility specifically between uh, and the final trading hour. So let's talk about that. What is triple witching? It's an AI overview here. Triple witching is the quarterly expiration of three types of financial derivatives: stock index futures, stock index options, and single stock options. On the same day, occurring on the third Friday of March, which would be today, June, September, and December, this event often causes high trading volume and increased volatility. Key aspects of triple witching: volatile timing. The final hour of trading, known as the witching hour, often experiences high price swings as traders close exercise or rollover positions. Increased activity. Trading volume can rise significantly, with historical data suggesting roughly 30% more volume than non-triple witching days. Market impact. While often creating market noise, it is a normal part of options trading and portfolio rebalancing. The three derivatives, it talks about it again. Historically, these days are marked by a downward bias in the days leading up to the expiration, followed by a potential turnaround afterwards. So, anyway, a lot of volatility is typically bad for buying power when you're an options seller. So keep that in mind. Your options, your buying power could potentially get compromised when there is a spike in Vega, a spike in implied volatility. So if you're trading really, really large, like I do, you have to be mindful of your buying power, because you can get a phone call from Mr. Margin. And we all like getting phone calls. It feels exciting when your phone rings, not when Margin's calling. You know what I'm saying? So keep that in mind. Anyway, let me check. In when some of you guys. How long ago you been in business doing this, and you beat the S&P with your strategy? Well, let's see. I've doubled the portfolio twice. We're going on the next double. And this one's tough because when we went up, I was already on the way for the next double, then got my ass kicked, and now we're trying to climb back up. So we'll see. But yes, I've definitely been crushing the S&P 500 since I started going 6 years full time. But this year, I still have a lot of ground to make up. I think that it'll be fine by the end of the year, but I'll have the real answer for you at the end of the year. Literally have TJ on the phone. Is it mid live right now or what? Is that what's going on? Appreciate you, my man. Yeah, I'm on it. I'm on 215, the road to 200. Road to 200. I got 259 was my heaviest. Then I got serious at 250. Actually, I went from 259 to 210. Then I went back up to 250. Then I was like, okay, this is ridiculous. So went back down, capped out at like 220, 215, 212. Right now I'm 215, 216. I'm going to get to 200. I'm going to get to 200 here in the next couple of months. And I'm going to try to figure out how to camp out between 200 and 205. So light heavyweight in the UFC. And then sometime in 2027, I want to see what it feels like to be 185 pounds. I still think that 185 is kind of heavy for my frame, because I'm only 5'8". But that's probably as light as I ever want to be, because I just feel like I'd be too scrawny. And I used to be real skinny when I was younger, and I didn't like it. So I got in the weight room and I just kept lifting and lifting and lifting. And so I'm just thinking 185, I could still carry some mass. I could still, bench, probably north of 275. And I feel like just people can't like push me around. Now that I'm 51 years old, not that I want to be fighting or anything, but I still just don't like to be in a situation where I feel like just anybody could push me around, because God forbid I had to defend my wife or something like that. I want to be able to do that. So I don't aspire to be 140, 150 pounds. My wife weighs freaking not even 100. So we just get our ass kicked with all the vacationing that we do. So I'd rather be 185, 195, 200. Over the long term, DB, we did that already. What's going on? Keep it up. I'm getting tired of the cookie jar, TJ. Man, that cookie jar got me fat, but the cookie jar can kick your ass in the stock market too. Let's get into it, man. Let's get into it. I'm kind of anxious to see how the portfolio is holding up. Surprisingly, pretty flat because I see this number here of 4170,000. It's going to fluctuate a lot, guys. We're live. We're live. So you guys can see the massive drawdown there, 3.6 in the big one. Y'all see massive drawdowns across the board, mostly because this year, because of PayPal. Got absolutely obliterated on PayPal. So we'll get to that position here in a second. But I want to go through the other portfolios real quick, and then we'll get to the featured account. And I'm going to move that to the other side. I just like to be on this side right now because in case if I need to make some trades, I do it on the desktop. On the website, I don't like making trades because it's just uncomfortable. It's uncomfortable for me. So anyway, let's get into account ending in 46. This is a high 300s account, probably like 375 net lick. We got the cash balance of 617,000. Profit and loss for the day, profit and loss year to date, options buying power, the delta, the theta, the vega. You're going to see that most of these accounts, probably all of the accounts, are going to be short vega because whenever you sell options, you're short vega. What does short vega mean? Is you benefit from a volatility contraction and it is detrimental to your health, especially your financial health, when there's a volatility expansion. So I have a lot of short vega on there because I have a lot of open options that I sold. So that's how you read those numbers. Uh, there's the delta, the vega, the delta, the theta, the vega, the extrinsic value, the buying power usage, the buying power usage percentage, et cetera, et cetera, et cetera. So on buying power percentage, I always want to be in that 50 to 60% range. That's kind of like the cautionary range, closer to 60. I'm above 60 in the bigger account. So that's like your red lining right there. Volatility expansion, boom, margin call. You have to trim positions or deposit money into the account. So just so y'all know, like I'm trying to show y'all the portfolios through my lens, if you will. So now let's look at account ending in 46. Again, it's high 300 account, and we only got 5 positions. I'm putting this on days to expiration. So what do we got? SoFi. We've got SoFi expiring in 28 days. And it's a commitment to buy 2,500 shares of SoFi and 1,000 shares of SoFi at 18 and 22 collectively. We're in a position where we can take ownership of these shares, so we might not do anything. We'll see. We'll see. We're going to let it play out for the next week or two. And then we will either roll or we'll just take assignment and we'll start selling covered calls. Or if SoFi pumps, then we don't have to do anything. We don't have to do anything. We'll see. But the way that you read this, it's like negative 25, April the 17th, 28 day, 18 puts. What does that mean? It's 25 short puts expiring on April the 17th, which is 28 days from now at an $18 strike price, and it's a put. When you see negative 25, that means that you sold the put. If you see positive 25, or there's no positive, it just shows 25, that means that you bought the put. So when you sell an option, by definition, you're short that option. So it's going to short is negative. So it's going to show the negative sign. So I'm showing you guys how to learn how to read these screenshots really, really easy. Trade price. That is what did we get per share? And then the cost is the total premiums collected. The net lick is how much premium do you got to give back to get out of that trade? So if we wanted to close this trade completely, we're like, no, we got cold feet. We don't want to do it. SoFi's going to $8, like Valentin says in our chat, right? Our resident troll. You're like, I don't want to do it. I thought I wanted to do it. I don't want to do it. Well, you got to give back $3,700.50 in premium, and you only collected $2,875. So you're going to lose $875. In this case, $850. That's why you have the profit and loss open, and it gives you a profit and loss open percentage. Been in this trade for 21 to 29 days. The days to expiration is 28 days. So this was, effectively a 57-day trade, right? It tells you when the earnings are, according to this thing, 5.5. I don't know if that's really true because I don't think that SoFi's actually announced that. Probability of profit, that is just like, what are the probabilities that you would make at least $1 on this position? Tells you what the out of the money percentage is. So it's only 38%, 39%. So basically, it is saying there's a real high probability that you're going to have to take ownership of these shares if you don't roll it. The in the money percentage and the capital requirement for the entire position is $66,000. The little theta snowman, it's how much theta you're collecting on a daily basis. If all of the other underlying factors remain equal, then it's your delta, right? So it's your delta. So we got 56 delta on those short puts at 18. And on these short puts, we have a 93 delta. So as you get closer to expiration, this delta is like a mirror. It is either going to show that you're going to own these shares or not own these shares. So the closer that you get to 100 or to a delta of 1, that is showing that you're going to own these shares. If you're not going to own the shares, it's going to be like closer to 0, because at the end of the day, the time's going to run out on your option and you're either going to get put these shares or not put these shares. That's what a cash secured put or a short put is. Whenever you have a covered call or a short call, you're either going to have the shares called away or not called away. So that's how that works in a nutshell. So we're in a bind here on SoFi if we're not excited about owning them at 18 and 22. The good news is we have an obligation to buy a lot more shares at 18 than we do at 22. So it kind of all averages out to probably about a $19 average cost if we take ownership of all the shares. It's trading at 17.30. I'm like, dude, it wouldn't be that big a deal because it's 35 contracts. So we start playing this game. We're like, let's pretend like we already own the shares and we wanted to sell covered calls a month out at say $20 because you own them at 20, or you own them at 19, you agree to sell them at 20, and you do 35 contracts. So you type in and you go 35 contracts. You're agreeing to sell 35 calls on SoFi at $30. What does that bring in? $1,000. So I'm like, okay, well, we take ownership of these shares. So now we have a little rental property there that, paid quite a bit of money for. But it can yield us about $1,000 a month in premiums on the covered call side. I don't think I really have to do anything right now. I'm like, that's not the end of the world. Do I think that SoFi at some point will be above 19, which would roughly be our average cost? If the answer is yes, then you don't really have to do anything. If you can afford it, can you afford it? The answer is yes. How? Because there's a lot of cash there. So we could totally afford taking ownership of those shares. So I'm not just going to continue to roll and pretend like I have an STD, a stock-sleep transmitted disease. Whatever you guys face the prospects of getting assigned shares, you act like you're about to come down with some sort of a disease or you just got diagnosed with cancer. Relax. You can always take ownership of the shares and start selling some covered calls. And then you own those shares as long as it makes dollars and cents for you to do so. And then eventually you can choose to get the shares called away. And then you can start selling cash secured puts again on that underlying or something else. We'll see. But if owning shares terrifies you, this is the litmus test for you guys. If the prospect of owning shares in the underlying that you sold options on terrifies you, that is a really, really good indicator that you're not actually bullish on that underlying, that you're just premium cash grabbing. And that's okay. But these are the times that you can potentially get caught with your hand in the cookie jar, and nothing feels worse than being underwater on shares that you never wanted to own in the stock market. So the golden rule of selling options is only sell puts on stocks that you would be willing to own at a certain price. If you follow that one rule, you're going to avoid a lot of acrimony in the stock market. You're not going to be pissed off at yourself because you like the underlying that you sold options on. If you get paid a premium to own those shares at a discount to today's prices, because whenever we sold these options, SoFi was above those strike prices. So in actuality, they paid us to take ownership of those shares at a discount. Now it just turns out that it's no longer a discount because SoFi kept going down and down and down. But if you already owned the shares, well, you would be dealing with this drawdown anyway. So it is what it is. At least you have the premium in your pocket. Down the road, we have a big obligation to buy a lot more shares of SoFi at 15, and the cost, that's all the premiums that we've received to do so. And we're not selling any covered calls on SoFi as of yet. Palantir, what's going on with Palantir? We're running the rich man's covered call. What is that? It's something that I made up, but instead of buying a leap like the poor man covered call, you sell the leap. So you sell the leaps put at a strike that you'd be pretty comfortable owning the underlying, and that's what we did. We agreed to buy 5,000 shares of Palantir at $75, and they paid us 40 grand for doing so. We're already up $11,000 on that contract. But in the interim, we're pretending like we already own the shares, even though we don't. And we're starting to collect some premiums for agreeing to sell these shares that we don't own at $200 28 days from now. And they paid us $7,200 for that. There's $1,700 in extrinsic value there. So we're already up 76% on that. And I want to do that over and over and over again because two things cannot be true at the same time. It's called mutually exclusive. It's this or that. These $75 puts cannot be getting challenged at the same time that these 200 calls are getting challenged. So we've created a sweet spot, a goalpost, if you will. As long as Palantir is chilling under 200 and above 75, we can continue to print over and over and over and over again. Palantir starts juicing up because it's Palantir. Then we're going to roll to 220, 240, 260. I think the highest price target on Palantir right now is 260. So we would roll to 260, 280, 300. Like you have to have a vision of what is this going to look like when it actually turns into a regular vanilla short strangle. Maybe 75 on the put, 275 on the call. If we were to push everything out to 454, and I want you to type in the chat if you had to give a percentage of a chance that Palantir would be trading between 75 and say 275, 454 days from now, I would be willing to bet that the majority of you would say at least north of 80 to 85, possibly 90%. There's no such thing as 100%, but I would give it like a 97, 98, 99%. I think that Palantir is going to be trading between those goalposts, 75 on the put, 275 on the call, 454 days from now. And that's why I set the trade up that way. BMNR, what's going on with BMNR? We got 1,200 shares and we paid $21.51 for those, down $1,000 on the shares. Not bad. We got the shares for sale at $25, 28 days from now. We got paid $1,224 for that. We're already up 27% on that part of the trade. And we got an agreement to buy 800 more shares at $20, 154 days from now. And you guys can see the percentages on that. So this is how you read it. It's not that difficult. You just got to slow your eyes down and read from left to right, because we read from left to right in this country. Enphase, what's going on with Enphase? Another rich man's call where you sell the put and in the distance, the leaps put in the distance, and then you start selling shorter dated calls along the way to ring the cash register. So we agree to buy 2,500 shares of Enphase at $30, 273 days from now. Right now, that trade's not going so well. We're down 16% on that. But on the short calls that expire in 28 days, as long as Enphase is below $60, we would capture $2,800, which is what they paid us. Right now, if we wanted to close that part of the trade, we would capture $1,925 or 68%. The $1,900 is higher than the $1,100 that we're down, and that's why it shows profit and loss open on the entire position at $769 or 7.8%. That's how you read it, guys. NVIDIA, we've got just a plain Jane short strangle, go post trade, sweet spot trade. We need NVIDIA to be above 150 and below 220, 56 days from now, to capture the $8,650 that they paid us. I like our chances. It's a 16 delta on the put, and it's a 6 delta on the call. The out of the money percentage is 80% on the put and 95% on the call. This portfolio is positioned for success. It's positioned for success. It's just a matter of time. Now you're like, okay, well, what would the portfolio be worth? How do you start doing some prognostics or whatever the word is, some projections? It's actually quite simple. You look at that cash, it's 617,000. How did they get there? You take the net lick plus the extrinsic value. So if everything were to expire out of the money, all things remaining equal, you could fast forward the clock to the latest expiration date and you were to capture all of that extrinsic value, you would add that to the net lick, and that's going to give you your cash balance, which is 617,000 in this case, and that would ultimately turn into your net liquidation value. So we are on the road to $1 million in this particular portfolio. We got to stack some dubs along the way, guys. We got to stack some wins along the way. That's how the game is played in a nutshell. Let me check in with you guys. I'm going to get back over here, and then we're going to go to the featured position because the rest of the positions are essentially all the same. So now we'll feature the bigger portfolio. But I feel like I gave you guys a real nice schooling on how to actually read the screenshots that I post all the time. So when you see this busy trading platform, like because Tasty Trade is very busy compared to like Robinhood, you're like, holy shit, it gives you a lot of pertinent information. And when you're an option seller, do you want something that's easy on the eyes, or do you want something that could actually help you fly the plane? So I chose leaving. Granted, I got kicked off the platform, but I'm glad that it happened. I chose leaving easy on the eyes behind because Robinhood's easy on the eyes, and I wanted more pertinent information to help me fly the plane because I was tired of calculating what's my extrinsic value. Tasty Trade just gives it to you. What's the expected move? Tasty Trade just gives it to you. So there's just a lot of gauges, if you will. Like if you're a pilot, you need all these gauges because all those gauges are telling you something. And that is why I feel like Tasty Trade for option sellers is the superior trading platform because it's going to give you all of the gauges. You just got to know what they mean now. Let me check in with some of you guys and we'll go from there. I think this is the last one. I was 243. My checkup a couple weeks ago. How to start getting those miles in. So sore. Right on, right on. I'm starting. I'm starting a little walking challenge. I hurt my hand, man. My hand is jacked, so I can't lift weights right now. So that treadmill, got the rower. I think I could row if I do low intensity. I think that I could hold on to that. I could certainly do the biking. So I'm going to start doing some massive amounts of cardio over the next couple of months because I feel like it's going to take a while for my hand to heal so that I could lift weights again and you know do the little mixed martial arts training that I've been doing a couple of days a week and stuff. So I got to do something. And then I've been getting in the sauna, man. The sauna is like extremely therapeutic. Oh man, I love the sauna. Absolutely love the sauna. My hand feels so much better in the sauna. And I think it's because of the inflammation. I think that whenever you go in the sauna, it helps with your inflammation somehow. Have you considered buying BTCI to cover its covered call ETF pays 25% in dividends? Right now, I'm not doing anything. Right now, I'm not doing anything because I got my hands full with the positions that I'm in. So the one thing that I'm not looking at right now is another ticker. In fact, I'm considered taking 2 tickers off, and I'll tell you in a second when I get to the portfolio update and recap on the big portfolio. Better to be a warrior in a garden than a gardener in a war. I like that. Good afternoon, TJ and crew. How are you doing, Stockman Mark? Best of luck and appreciate you guys. Need you to get below 200 ASAP. We have a bet. We have a bet with Captain Crunch on Twitter that Bitcoin gets to 100 or I get under 200. If I get under 200 first before Bitcoin gets to 100,000, he has to show his face and he's got to give me $100. If Bitcoin gets to 100 first before I get to 200, then I owe him $100. Captain Crunch is like the biggest troll on X. Like I don't know what he does. I don't even know if he works. I know he says he works. I know he goes on Starbucks and it says Dr. Raul on his freaking little Starbucks coffee thing. Never shows his face. But if you go on X, if you follow, he's a funny follow too. So I recommend following him. Captain Crunch, whatever his handle is on X. Uh, he's got something to say about everybody. He's like a freaking huge troll. And I start to often wonder if he works in like artificial intelligence and he just has like these programmed responses or he has this bot that's like a smart ass. Cause I'm like, how could but how could someone read so many posts and then just have something like sarcastic to say? Like there's not enough hours in the day for me to do it. It's kind of crazy. Happy Friday, another pocket filling day, right on. Mr. Poto, uh, where's this one? Are you running or interested in any positions on Hood right now? Uh, Interested, yes. Running, no. Why? Because I got my hands full. I got my ass kicked with PayPal, so that really set the portfolio back for a little while. So I had to go manufacture the win, and that's the thing when you go real heavy on a position because you feel like you're going to be right, and then you don't end up being right. At least not right now. You have to live with those results. So it is what it is. But I like Hood in the 60s, man. I'm still one of those valuation guys, when shit doesn't make sense. That's why I started playing the range game, guys. Like I was like, I just don't like owning a bunch of shares and a bunch of stocks anymore because this valuations just haven't made sense to me in a while. I was like, well, I could play the range game. And that's how I ended up where I ended up. I played the range game. Would you get kicked out of Glad because of options contracts limits? Yeah. So, but I also featured my buddy's friend on this, my buddy's account on the channel and traded the account live. And Robinhood didn't like that. They sent me a bunch of fraud accusation emails, all this crazy shit. It was nuts. It was nuts, but got it out of there. Moved over several accounts over to the Tasty Trade platform. Man, I'd say because of me leaving Robinhood, between 50 and $100 million migrated off of the Robinhood platform, which is nothing to Robinhood. It's all good. Only we had Tasty Trade in Canada. Maybe one day y'all will. Maybe one day y'all will. Yeah, I got nothing to hide, man. Robinhood, I got nothing. I'm not even angry at Robinhood. We're going to leave anyway. We were going to leave anyway because of the contract limit. Where is it right here? Something about contract limits. I saw it here. We were going to leave anyway because of the contract limit. And I wanted to graduate from covered strangles to naked strangles because a couple of buddies of mine sell naked strangles at a very high level, very, very high level, like over 100 million. And they were like, it's not capitally efficient. Your covered strangle, it's safer, but it's not capitally efficient. And I was like, definitely I'm going to get my ass kicked when I go do naked strangles. I go, you would. They go, you will. And I did. But then you'll figure out the trade that's going to print for you and you'll do it over and over again. You'll get all your tuition back and then you're going to be printing about $1 million a month. And they sold me on it. And here we are. And I got my ass kicked. It played out exactly the way they told me. It's kind of crazy, man. It's kind of crazy. It played out exactly the way they told me. I found the trade where I'm going to go get all my tuition money back. That's Palantir. And now I feel like I'll be able to print $1 million a month. I just was never going to be able to do that with the amount of money that we had to work with on Robinhood. And I have big dreams. I have big dreams. I want to get the portfolio up to $100 million and then, get off the map, right? Because you're like, you feel so exposed. My wife's not going to be cool with it. Oh yeah, man, that's a real good idea. Real good idea. Anyway, let's get into it. Let's get into the bigger portfolio here and let me tell y'all what's going on, what's good, what's not good with it. So let's get into it. Let's get into it. Let me make sure I got my days to expiration on point. And we do. Appreciate you guys tuning in, by the way. I know that our boy Amit was on. So I appreciate you guys tuning in and watching me. I don't know if he's still on. But anyway, appreciate you guys. So what do we got going on here? We got a sweet spot trade on NVIDIA. We got 160 and 200. Those are the goalposts. It's just got to cruise between 160 and 200 for the next 28 days. And we make money. It's really that simple. We go look over here on NVIDIA. How have we done with it? We made like 59,000. I rolled from 210 to 200, brought in a little bit of money. So that part was cool. So we haven't made a lot of money with NVIDIA since we came over to Tasty Trade. We just haven't. It's a great company. I just don't know why. I'm just not excited about semiconductors. I'm just not. I'm just not. I'm just not. Everybody does their own thing. You don't have to be part of every play. I just put this one on as a premium cash grab. I don't even give a shit if it's in the portfolio, just to be frank with you guys. BM&R. This is one that I'm excited about. Getting our ass kicked, but I'm excited about it. So what do we got going on? For those of y'all that might be newer to the channel, we had 125,000 shares of BM&R at about a $39 average, give or take. I sold those shares for $19.50 on average. And then I converted those shares into leaps because I wanted to free up about $1 million in buying power. So that's where we sit right now. We have 1,500 leaps at 25 bucks. We paid $1.324 million. And then I'm running the Poor Man Cover Call campaign. So instead of selling the leap, I bought the leap because I wanted long Vega, right? Because we're short Vega. So I needed some long Vega in the portfolio. But we're also short theta because you're long theta whenever you sell options, you're short theta. Like theta is working against you. It's not working for you whenever you buy options. So we bought the leaps, but it's also costing $1,000 a day in theta. So I was like, okay, I need to put some long theta on there. I need to sell options so that I'm capturing that theta, collecting that theta on a daily basis, all things remaining equal. So we sold covered calls against those leaps, and we did it 18 days ago, expiring 28 days from now. They paid us $87,000 for that, and we're up 63% on that. And that was the main deciding factor from transferring from the shares to the leaps, because this cover call premium is the exact same. And I was like, it doesn't make any sense to own these shares. There's like a really small dividend if you own the shares. It's practically nothing. And I was like, I need to bring that money through the door. That's going to offset the theta that we're losing, but we still have some upside, and I can keep rolling and rolling and rolling and rolling. What's going to get us back to good? Because we've gotten our asses kicked, absolutely kicked on BM&R. And now we're not even talking about the leaps. Lost about $1 million on the leaps. I had some leaps before, like 75 bucks. Lost $1 million on those, and then I ended up losing like $300,000 or $400,000 on BM&U. So we're in the hole, like legit, like $2.5 million on BM&R. So what is going to take to get us back to good? BM&R needs to have a 5 in front of it. We've already done all the math. Maths. We need to have successful cover call campaigns the way that we have one going right now. And we need to do that like 5-10 times over. And BM&R needs to go over 50 bucks so that these calls can print. And the good news is we're controlling 150,000 shares versus only having owned 125,000 shares. So when we get north of 50, this thing would have like about a 97 delta, probably, because it would be deep in the money. Right now, we only have a 71 delta. So we're only capturing 71% of the upside move. We would be capturing more like 97, 98, even 99% of the upside move if BM&R were trading at 50 bucks right now. But it would be on 150,000 shares versus just 125,000 shares. So we get to 50, we start printing. We're more than break even. Now we are legit printing. What's going on with MSTR? We got a sweet spot trade, a huge one, expiring in 58 days. The extrinsic value is 1.5 million bucks. So y'all see being down 3.6, 1.5 would come off the books if, we get back to good on 1.5 of it. But MSTR needs to camp out between 110 and 200. But we got to be mindful of our buying power, because the closer that you get to expiration, when it's an undefined risk strategy, the more buying power reduction, the more capital requirement your broker is likely to want, because you got to look at the notionals. We got to do math, right? So that is an agreement to buy 200,000 shares of MSTR at 110 bucks. So that's like $21 million of notional. Let's go look at the cash. There's 15.3 million in the account, and that accounts for all the premiums that we've collected. So there isn't enough money to take ownership of all of those shares unless we're willing to what? Tap in a margin. So we could technically do it. It would be extremely irresponsible. I promise you, we wouldn't do it. So we're just premium cash grabbing here, and I'm hoping to capture about 70% of that extrinsic value, which, all things remaining equal, would lower our profit and loss year to date to like negative 2.5, give or take. And then we're going to keep rolling these again. We're going to keep rolling these again. So we're going to do this again, and we would roll these out to probably July. This is again like 28 days from now. And then we, depending on what Bitcoin's doing, we probably do something like this. We probably do something like this. Something like that. And we pick up another $1 million. It would take another $100,000 of buying power, but we're spreading the wings, right? We're spreading the wings. We're spreading the goalposts. So we would go from 110 to 100, and we would go from 200 to 210. But then now we got to go look at the deltas. It's an 18 delta versus 21 delta. So we wanted to stay delta neutral. Maybe we go 220, something like that. So now that pays us 992,000. It doesn't hurt our buying power. It actually helps our buying power. And we're like literally delta neutral, 18 delta on the put versus 18 delta on the call. So that's what I think it's going to look like. But this would also be 1,000 on the put, 1,000 contracts on the put versus only 500 on the call, because at some point I'm expecting for Bitcoin to really break out 73, 74,000. Let's call it 75,000. I've been looking at the charts a little bit late at night. Bitcoin needs to hold above 75,000 before it can make its next rung up the ladder. And it's already touched it, right? It's already touched it, but it wasn't able to hold it. So if it holds it and if it prints, like, let's say, a weekly candle, I think it's go time, and it's probably going to go to like 84, 85, 86,000 pretty quickly. Again, I'm not a chopsticks guy anymore, but I used to be. I just try to hide that from the channel. I let the Uzi options do that. That's their lane now. It's not my lane anymore, but I know how to read the charts pretty quick. So I'm telling you, Bitcoin can camp out above 75,000 for a minute. It's going to go to 84, 85, 86,000 pretty quickly. And what does that do for MSTR? I don't know. It could potentially get it to that $200 range. So even though these are doing very well for us right now, they make me nervous. And I sold some today. So why do we have such a big trade on? Good question. Glad you asked. It's because we're down $1.2 million on MSTR. You see that profit and loss 477. It's because I stacked a nice winning trade, but now I'm going after a bigger winning trade, which is this one right here. And that would erase the money that we're down, and we would have officially broken even on MSTR. But more importantly than that, we would have found a position that prints money, and it's going to do it over and over and over and over again. I want to be in this trade for the next 3 to 5 years, but I want to play it heavier from the short puts versus the calls, and I got to size it down. I got to size it down at least to 1,000 on the puts. Could probably keep it at 1,000 on the calls, but I'd be more comfortable at 500 on the calls because I want to have a bias. I want to have a bullish bias, because MSTR makes me more nervous to the upside than it does to the downside. And when you sell naked cost, theoretically, you have an unlimited, undefined risk to the upside. When you sell puts, theoretically, you have an unlimited, undefined risk to the downside, but that's not really true, because how many of y'all think that MSTR is actually going to go to zero? I don't think so. What's the bottom? I don't know, 70 or 80, maybe. I think 100 is probably the bottom. So I'm like, It has a limited downside, but it has an unlimited upside potentially, right? So that could be, that could get kind of dangerous selling naked calls. Amazon. What's going on with Amazon? Amazon, we have 25,000 shares. We bought the shares at $208.64. I give it a C plus for an entry point. Not great, not horrible. But the reason I have that trade on is because I don't want to run an unlimited risk to the upside. But we do have 1,200 calls at 240. So Amazon needs to stay below $240 for us to realize all the premiums that they paid us, which is what? $576,000. There's $282,000 in meat left on the bone. So that 282 would come off at the 3.6. So it gets us to like 3.4. And then y'all have already seen the other million from MSTR gets us to like 2.4, 2.5, give or take, right? So that's how we're trying to manufacture the win and get back to good by the end of the year. I got to stack some dubs at the end of the day. So what has to happen with Amazon is just got to stay below 240. I wanted to pump because that helps our shares, but I don't want it to pump too much. And why are those shares important? Is because this position is not as naked to the upside as you would think. Because for every dollar that Amazon goes up, we're going to be locking in $25,000 on the shares themselves via the capital appreciation. And the puts over here would be printing. Amazon goes up, those puts print because those are short puts. That's an agreement to buy 100,000 shares of Amazon at the end of the year, 273 days from now, at $180. And it's a 28 delta. So there's a 28% chance that that'll happen. There's a 72% chance that that doesn't happen, and we get away with all of that extrinsic value, which is what, 1.3 million bucks. So that would go to the good as well. So I'm showing y'all how I feel like we're going to get back to even by the end of the year and then some. So it's all riding on printing on BM&R via covered calls and BM&R pumping a little bit at some point. It's all banking on being able to manage the goalpost, the sweet spot on MSTR, and then sizing it down so that our buying power is not so compromised, because it's compromised right here. A volatility spike, guys, and this thing's going to turn negative. It's going to show buying power usage of 150%. Like, it doesn't go from like 70 to 80 to 90. It goes from like 70 to like 150%. It's crazy. It's crazy. So now I have to figure out, what would I do if shit were to hit the fan? What would I be willing to get rid of to free up buying power? Good question. Glad you asked. The very first move that I would make is I would simply close this strangle. It's not huge, but it's $100,000 in buying power requirements. Why is that important? Because that would be about 1 percentage point, maybe even 2 percentage points on the buying power usage. So that would help us out. The other thing that I would do is I would close this PayPal short put, because this PayPal short put is tying up over $597,000 of buying power. Why would I do that? Because these expire in 56 days. These short puts expire in 637 days. So I would just lose yet another $200,000 on PayPal, add it to the 1.9 that we're already down, and I would wait 31, 32 days, and then I would get back into that trade again. But by that time, I would theoretically be in the driver's seat on MSTR. So those are the two moves that I would make to give us the buying power necessary to stay in this trade to hopefully the 21-day cycle, because I'm treating the 21 days as our actual expiration date. And wherever we're at, if we're able to capture some premiums, fantastic. How do we capture on both sides? Is MSTR needs to be camping probably between 135 and 155. We would capture on both sides. If MSTR takes a leg down and it's going to like 115, then we're getting our ass kicked over here on the short puts, but we printed on the short calls. And that wouldn't be the best case scenario for us, because there's not as much extrinsic value tied to the short calls as there are to the short puts. So the best case scenario for us is for MSTR to be trading at like 160, 165 in a month. That would be like the best case scenario for us, because we would be printing on the heavier side of the trade, on the bigger side of the trade, which is the short puts. We would be printing there, And because MSTR theoretically would be at 160, 165 on the next roll, I'm not going to be at 200 anymore. I'm going to be at like 240 or 260. So the goalpost is going to expand substantially. And I would probably stay at the 110, maybe even still lower it to 100. So we would have a higher probability of success on the next trade, and then we would just keep trying to capture and capture and capture so that we can cut into that profit and loss year to date. So Amazon, we've already covered that one. It needs to be under 240. SoFi, I took this PayPal situation and I was like, this sucks. This sucks. SoFi, can you go get me that money? So what I did is I sold a shitload of puts at 15, 637 days from now. And it's not an accident that it matches the expiration date on PayPal. And I was like, go get me all that money, SoFi. And SoFi was like, I can't get it all for you, but I can give you 1.8. And remember PayPal, we're down 1.9, right? So I was like, well, that's close enough. I'll run some short calls. And that's what I started doing on SoFi is I started running a short call campaign 154 days out. So this is effectively the rich man's cover call that I speak of. You sell the leap, you sell the shorter dated calls, and we're already up $191,000 on that part of the trade. And we also picked up 25,000 shares that we were not running completely naked to the upside. So that I've already taken the PayPal money and I put it into SoFi, and I was like, that sucks. I'll have to go do one of those I was wrong videos on PayPal if I had to bail out of the trade completely. And if our buying power keeps getting compromised, I'm telling y'all that might have to happen. I hope that it doesn't, but it may happen. That's going to be my go-to move. So then now y'all have seen all the tuition that I paid. It's all right here. So I was like, how can I orchestrate a trade that's going to get me my money back? So I picked Palantir. I looked at everything that I was in and I was like, let me find one that's just been printing money. And you guys can see it right there. Made $1.1 million on Palantir since we moved over to Tasty Trade, not counting the well over $1 million that I had already made on the Robinhood platform. So we got an agreement to buy 500,000 shares of Palantir 454 days from now at 80 bucks. That's a notional of $40 million. This is a premium cash grab. Again, if you don't see $40 million there, then we can't afford to take ownership of the share. So it is literally just a premium cash grab. So I'm trying to either make money or not make money on the premiums. Zero intention, not able to take ownership of these shares if we wanted to. But I'm going to sell two or three massive naked calls along the way, which is what I have right now. Is I have an agreement to deliver 200,000 shares of Palantir at 220 bucks 154 days from now, and we got paid $1.5 million for doing so, and we're already up over $500,000 on that side of the trade. So I was like, let me figure out the short strangles. Let me figure out the metrics that work and don't work. And I'll talk about those metrics in a second. And then I will put on a trade that's going to get me all my tuition money back. But I'm going to also put on a trade that can make us $1 million a month eventually. And that is what I feel like I'm doing here on Palantir as soon as I'm able to max out on the short calls. Because if I max out on the short calls over here, and I put these at 220, and I do 3,000 more contracts, which is what this trade will eventually look like. That's another $1.5 million that I could lock in between now and 154 days, but it would reduce my buying power by $2 million, right? Which is tough because we only got 3.6 to work with. That would put us at like 90% usage. So there's a world where PayPal is not going to be on there. NVIDIA is not going to be on there. I'm going to scale down the MSTR trade. I'm going to scale the Amazon short calls from a 1,200 to 1,000. And that is going to give us the buying power that we need to max out the tuition super short strangle that I put on Palantir because I looked at Palantir and I was like, I can make $1 million off of that fucking stock. And I just started doing the math. And I was like, how would I be able to do it? The goalpost would have to be really, really wide. And then we're going to fast forward this 154-day cycle to the 454-day cycle. And what's it going to look like in my mind? It's going to look like 80 to 100 on the put, 260 to 300 on the call. And I'm pretty damn confident that Palantir is just going to be cruising between those. And I'm going to be collecting that theta on a daily basis. Right now it's 19,000 bucks. So this is just major theta collection, guys. Major theta collection. And that's going to increase as we get closer to expiration. And I'm going to be under that 20 delta the whole time. So pretty stress free. But I need to have these other positions open because if I were to close everything and just max it out now, I could potentially get some concentration risk flags or something like that. So that's all of it in a nutshell, man. That's all of it in a nutshell. I'm gonna give you all another high level metric. You take the net lick in this account, it's about 11.5 right now, and you take the theta per day, 75%. I thought that I could do 1% a day and the buying power just doesn't hold up. So the magic number is between 0.5% a day and 0.75% a day. That's the metric that you need to know. That is the metric. That is the metric. And I look at this shit all the time. That's the metric. You take your net lick and you put, I'm doing 0.75 because I'm more aggressive. Tasty Trade's going to recommend probably 0.5. And that's when volatility is kind of high. That's where you want to max out is at 0.75. I've tried 1% net lick. So you got $10 million. You're like, I'm going to try to collect $100,000 a day. And it just doesn't work because any volatility expansion and you get your ass kicked. How do I know? Because I got my ass kicked. So anyway, you're welcome. You're welcome. I'm giving you guys all the tuition. That way you don't go and make those mistakes that I've made learning how to sell strangles. Because I feel like I was already the best at selling puts and calls and running the covered strangle. Like Henry's good. In my mind, I'm better. But I was like, now I want to learn how to master the short strangle. So I got to learn the metrics. I got to learn how to fly the plane. What do these gauges mean? Now that I know what those gauges mean, I'm like, okay, got to go get back to even first. And then now I'm going to print money. And I think that we're going to be able to capture $1 million a month going forward. I think we're like less than 90 days away from that, which is pretty freaking exciting. Let me check in with you guys and I got to go. Let me check in with you guys. I appreciate you guys, man. An hour 510 people on X, 68 live. I appreciate each one of you guys. Hit the like button, all that stuff. I hear it helps the algorithm. I did this one. I did this one. Oh no. And E-Trade's solid. That's kind of surprising, man. I hope they get it fixed because this shit's about to get crazy. Where are we at? Yeah, E-Trade pulling. That sucks, man. Always good to have multiple brokers. I have Rocket Labs calls expiring today, way out of the money. It's different. I hear you. I can hear that. Thanks. I'm on site, but still having trouble. Oh no. Are you serious? Let me see. Let me check. Chuck Norris. Oh man. It's right here, guys. It is with heavy hearts that our family shares the sudden passing of our beloved Chuck Norris yesterday morning. Oh, he was 86, man. That's a life well lived. Life well lived. Walker, Texas Ranger. He fought Bruce Lee. Man, we're all going in that direction. Nobody's in a hurry, right? Nobody's in a hurry to get there. Oh, where are we at here? What's your take on TSL right now at these price levels? It's not so much about TSOL, it's about Tesla. Got to study the charts. Manish will send me some charts over the weekend. Uh, Tesla goes under 350, 300, then wherever TSL is at is where it's at, and that would be very exciting. Would it be smart to consolidate in the top 3 or 4 conditions right now and manage a smaller portfolio instead of diversifying? I'm always a fan of that, but there's so many different schools of thought on that. You guys have seen it, man. 4 to 6 positions on everything. That's just me. That's just me. Everybody got to do what makes sense to them. Everybody has to do what makes sense to them. Appreciate you guys. Oscar, I got July 17, 14 push. Should I roll down any longer or just take the L? What is Oscar at? I'd have to see what Oscar's at. Let me pull up Yahoo Finance. I'm just looking at it in the background, guys. Bear with me. OSCR, I believe. There's Oscar. Man, didn't even show up. My push did nothing happen. What's Oscar trading at, guys? I'm trying to pull it up on Yahoo Finance and nothing's happening. Oh, 1278. It's trading at 1278. And your put's at 14. It's trading at 1278 and your put's at 14. I wouldn't even be looking at that position. I go golf. You got nothing to worry about. You're in there. Worst case scenario, you get assigned the shares, you sell calls at 14. There's no reason to roll right now, in my opinion. But here's the litmus test for you, Minlin 5575. If you don't get excited about the prospects of owning those shares, then you're not bullish on that underlying. You're just like the premiums. You're premium cash grabbing, and that is okay. But make a note in your journal and be like, I only like Oscar when it's making me money. I don't ever want to be in the hole in Oscar because I just don't want to own Oscar unless I know for a fact that it's going up and to the right. And we're never going to know that for sure with any stock. So you got to be willing to ride the roller coaster if you're going to own the shares in that particular stock. If you're not, then you just keep rolling and rolling and rolling until it expires out of the money. And my suggestion to you would be go find a stock that you actually want to own because one day you're going to have to own it. That would be my suggestion to you, is find a stock that you really want to own because one day you're going to have to own it. Right now, it looks like you're going to get away with it with Oscar because if your put's at 14 and it's at 1280, that's not even worth having a conversation. You're good. You got to work on the space between your ears, though. Is BM&R the only major loss you realized over the past year or two? No. Google and Apple ran out of buying power. This is where I learned. I'm telling y'all the tuition. This is the tuition, right? I was trying to do 1% of net lick, and that didn't work. So I had to realize 7-figure losses on Google and Apple. So of those 3, so that's why I put the Palantir trade on. And this is all schooling that I had, guys, going in. Like I have a lot of higher level option sellers that have coached me, and I'm forever indebted to them. So they knew that this was going to happen. I didn't think it would because I think I'm better than them, but they got the results that I don't have, right? So do the math. And they're like, you'll find the trade that you feel good in, and you'll go do your supersized trade on that, get all your tuition back, and then you'll print money. Call it good. Ugh. IDEX. That was my first 6-figure loss. I never thought I'd have a 7-figure loss in the portfolio. But whenever you play real big, you're going to win big, but you're also susceptible to losing big. Now, I will revisit the Google and Apple because I can put those super strangles on and go get that money back pretty quickly, actually. The issue with that is it's going to take buying power. So I have to trim some positions in order to bring some of those on. But right now I'm not willing to trim too much because I have that winning trade in Palantir. And I challenge you to comment if you think that Palantir trade doesn't make money. We all know it makes money. We all know that it's going to make money. Hell, all it's done is make money. The SoFi trade is going to make money. It's just going to stay above 15. Pretty confident it's going to stay above 15. So paid tuition, trying to figure out the metrics. Now I'm ready to print. I think we're about 90 days away from printing really, really big on a consistent basis. And now when I see all these freaking numbers on Tasty Trade, I'm like, okay, caution, caution, caution. Like I really know what it means now. So it's like it's one thing to understand the Greeks. It's another thing to understand how it affects your metrics in your portfolio. So there's a learning curve. There was a learning curve. Took me about a year. Took me about a year. What would have saved me tuition? Just not trading as big. Just not trading as big. That's the bottom line. And one of the losses I took was only because the deposit wasn't going to get there in time. So we're moving some money around and we just weren't able to do it. And I was just like really pissed off about it because I didn't have to take that loss. I think it was either on Google or Apple. So that one's the only one that really pissed me off. The other ones was like whatever, I could revisit them. And then obviously I got it really wrong on PayPal because I was like excited about selling all these puts at 50. And then I had to roll and roll and roll. And then we landed at 40. So now I'm good. Like PayPal doesn't cause any stress anymore. I just got to go through a couple of cycles and then we're whole on PayPal. So I haven't necessarily taken all the tuition on PayPal, but I'm telling you all that I will if that's the buying power that I need to see the MicroStrategy trade play out. Because I feel like yeah, that was not a big one, man. That was like less than 80,000 or something like that. And I know it's crazy to say that they're not big, but not compared to what I'm doing now. Yeah, PayPal, Intel was small potatoes compared to the shit that I'm dealing with now. So anyway, let's just wrap up the portfolio real quickly again. Let's just recap it real quick because I got to run. I think it's going to get ugly towards the end of the day, guys. I think it's going to get ugly towards the end of the day. I think that this negative 125 will probably be more like 300 to 400,000 by the end of the day. Is my best guess. And I don't have anything that I'm looking to do the rest of the day. We're just monitoring buying power. The only thing that I would do if my hand was forced is I would close PayPal. I would close PayPal and I would close Nvidia. That's where I would find the buying power to weather the storm, let the market do what it's going to do, and then we'll see what happens. But past that, I don't have anything else that I would do. I could roll these right here. Again, this is something I won't do, but I mean I could do. I could roll these covered calls on BMNR again and bring in another 80 grand, 1 percentage point, half a percentage point on the buying power. So there's like little things that I could do. And I could roll this one prematurely as well, but I don't want to do that. I want to stick, like everything that I'm doing in the portfolio is to stick this one out because I feel like I'm in a winning trade and I want to realize that win in a nutshell. There's nothing that I would do on Amazon. I'm already kind of uncomfortable at 240 on the calls. So I'm definitely not going to like lower down to like 230 just to bring in more premiums. And I don't think the algorithm would like that either. Like I don't think it would like me taking on that unnecessary risk. It's kind of surprising that they would reward me for that right now because that would help us 2 percentage points on the buying power. But I wouldn't be able to sleep. I wouldn't be able to sleep for freaking 56 days because I would be so stressed out about Amazon. I would be so stressed out about Amazon. But it is nice to see that we have options there for buying power. I'm already maxed out on SoFi. There's nothing that I could do on SoFi. The only other thing that I could potentially do on SoFi is lower the strike price. I could lower the strike price from 30 to 25, for instance. And that brings in another quarter mil, but it reduces our buying power by $1,000. So the algorithm doesn't really like it. And I don't like it either because I was kind of nervous when I sold these calls at 30. So I don't want to like be making a bunch of moves and rolling strikes down on the calls. And then we have a couple of green days. And then now those calls are kicking my ass. And that creates a whipsaw effect in the market. So I think the thing that I will do the rest of the day is just sit on my thumbs and see what I have to do versus just pushing buttons for the sake of pushing buttons. I'm hoping I don't have to push any buttons. That way I could make the little 20 grand on Nvidia, get it off the books. I don't think I'll keep it on the books until I get to the other side of the MSTR trade, and then PayPal would be the next one. Past that, I don't have any other moves. The good news is there's another $1 million that we're able to put into the portfolio. That would reduce the buying power from 68% to probably like 60, 61%, something like that would be my best guess. I got to run though, man. Appreciate each and every one of you guys. Y'all have an awesome weekend. Go touch grass, go breathe fresh air. Once the market closes, forget about it for a day or two. Recharge the batteries, man. Recharge the batteries because the weekends are crazy. Donald Trump will tweet all that stuff. Who knows? Who knows what we're gonna get over the weekend? Anyway, I got to get rocking and rolling. I appreciate each and every one of you guys. The 541 people on X, the 53 people on YouTube. Y'all could smash the like. I appreciate you guys. TJ, the Will Deal signing off as always. May your sky stay blue, stock screen. Peace out. God bless you guys.